Yeah, welcome to this video, and today guys, this video is just about price action. So I want you to understand that there is a way you can predict the market, or there is a way you can just read the market without any analysis, right? And that way is using your market structure. It's the combination of your market structure, your candlestick reversal patterns, just like the morning star, evening star, double bottom, triple bottom, candlestick formations and patterns like that you can even use to read the market without just without any indicator, without doing any analysis. Just by using your candlestick, you can read the candlestick, you can read the market and know what the market is actually doing. All right, so today we're just going to be combining both the market structure, then what else, the market structure, trend line, support and resistance in one chart here. So we're going to be combining all of that. So I'm going to clear my chart now. I'm going to clear everything. So we're going to be reading this market. First of all, we don't want to know what is happening here as of now. Let's just eliminate this area, this point in time. So you want to identify what the market is doing. What is the market actually doing? You want to go to your daily. Okay, let's use the 4 hours to read this. Let's go to the 4 hours. So using your 4 hours time frame, you can see that, okay, this market created what here? This is touch here, right? This is staple bottom, which is what? A very nice reversal pattern. You can see this. You can also see this as well. Sorry. I'm trying to clone this. Okay. So this is you can see this touch. It's not a must. It should be exact the same price line, right? So it can touch just around that area. Make sure that it's close. So you can see this formed here. This is this pattern here. Once you see a pattern form like this on the 4 hours, know that it's about to reverse. And also double bottom. Once you see double bottom pattern form, something like a W. I'm going to show you. Something like a W, and also something like this. You can see this, right? Once you see something like this forming, always know that the market is about to reverse. Like, it causes a major reversal in the market when trading this. When you spot this kind of multiple rejection, first one, second one, the third one, it always causes a major trend reversal. So if the market, you can see that looking backwards, the market was trending all the way to the upside, but after this thing formed, what happened? The market continued down. So that is one of the major patterns you want to be looking out for when you are trading. When you spot something like this, these three rejections like this, first one, second one, then come back again, retrace it back. The third one, know that the third one is going to break this low, and it has a very high chance of breaking these lows, resting below this point, because of what? This is a major trend reversal pattern in the whole world. So every traders make use of this. Most traders make use of this, and once they spot it, they take advantage of it. So where is another one? I'm going to be showing you double bottom as well. You can see, just take a look at this point. This is what I was telling you about. You see that the market was trending all the way to the downside. What happened? You see another top formed, created the same low, equal lows, went all the way to the upside, created the same equal lows. What happened? You can see 1, 2, 3 touches. The trend changed all the way to the upside. It continued like that. So let's just spot more of this. So this one is double bottom. You can see this one. This is not actually clear like that, but Let's go to a better one. This is what I call double bottom. It looks like a W as well, something like this. Just two touches, two touches, two touches. On that second one, you should know that once you reject off that second one and break this high in the middle, there is going to be a retracement back to this area. At least 50% of this long candle here. And once it retraces back, you should always look for your support area, plot your Fibonacci retracement, then you can catch this kind of moves. So let's still continue. Double bottom, very nice double bottom, and triple bottom. You can see this 1 2 3 drop, 1 2 3 drop. All these things are things you should be always looking out for on the chart. So with this alone, once you spot a triple bottom when you're in a downtrend, guys, just know that the market is about to reverse on the 4 hours. Once you spot it on the 4 hours, just like this one, you see this one is the inverse of that triple bottom, but this one is for the this one is when you're in an uptrend and it forms like this triple tops. If it can form like this, know that there is going to be a massive drop to the downside. I'm telling you, it happens most of the times, and also double bottom like this. Once you spot something, first one, second one, guys, it's going to break through, come to retest it, or come to retrace back to this 50% area here, then shoot all the way back down. So with these things, you should be able to always know when your trend is about to reverse. It's very, very, like, you need it as a trader. You need to know it and spot it. I'm still going to send a picture of this thing to the group so you guys can be able to, if you can print it or have it on your phone, so that whenever you spot it, then you make use of it. So when you are trading, first of all, try to identify patterns. Morning star, evening star. What is the trend first? Right? What is the trend? What is the market? What is the candlestick patterns that are being formed in the market? These are the things you have to ask yourself. You can see, let's take a look at this point in time. So let's assume we are at this point, right? Okay, now we are now having this retracement all the way to the upside. But what do you think about this market? What do you really think? Do you think this downtrend that is in place now, do you think this small move that has not breaking this top can change the trend from what to the up, from downtrend to upside? No, you shouldn't be thinking like that. And if you are to even think it's going to give you that trend to the upside, first of all, this place, when it's exhausted here, did it form any double bottom? Any double bottom here or triple bottom? No, it did not. It did not. Look at this. What is this? You can see this breakthrough. That means it broke this low. It broke this low. So you shouldn't even think that the major trend now is what? Downtrend. Sorry, uptrend. No, you shouldn't be using this. And after everything, see what happened. It bought all the way to this upside. What happened? Created this one. What happened? Created another triple bottom here. Created another triple bottom. Look at first touch, second touch, third touch, then still sell to the downside. So all these patterns are still telling you that we are in a downtrend. We're in a downtrend. We're in a downtrend because I'm creating triple tops, multiple rejections at the top, which means that price is just failing to break above this point. And what happened? The market came again to retest that point again, shoot all the way to the downside, came again, retest it, shoot all the way to the downside. That is why I said that when you want to look for trend, when you want to look for a breakout or change of market structure or change of character in the market, always wait for a very long bullish candle to break it, not a week of a candle. And you can see that the market retraced back. What happened? It just dropped. It just dropped. So once you are trading this thing, always look for a very nice confusing pattern that can tell you that yes, we are majorly in this trend now. So that's it for this one. So we're going to be going backwards. Another one is looking at what the candle body itself. It's just very simple. Once you take a look at this market, you see that majorly we are in a downtrend all the way to this point. Take a look at the bullish candles. Just take your time and look at the bullish candles. Is it that, full? Can't you see that it's creating small bodies rejection? Sellers are still trying to push the price back down. They are creating small rejection. They will move to the upside a little bit, continue rejection. Then a massive bullish candle came up. Are you going to use just this one candle to confirm your trend? No, you shouldn't, because take a look at this. You can see this. You can see this consolidation. This is 4 hours. When you go to the 1 hour, you see that this is a nice consolidation at this point. You can see that the market started consolidating, creating the same equal highs, equal lows, then broke through it. Still sellers, and majorly we're in a downtrend. Then buyers bought it all the way to the upside, testing this support resting here. This support resting here. This is where they came to retest. So this is where they came to retest this point. They retested this point, pushed all the way to the upside, retested where still. So all these things are like things you should be looking out for as a trader. You don't want to make mistake, because we are talking about money here. And if you are not careful, you will lose it. Look how the market was creating this nice movement. You can see pushed up, then sellers push it all the way back down and get pushed up. Sellers continue doing the same thing. They never allowed buyers to take over. And this is what happened again. The market pushed below this point, tested where it's still a support resting around this point. Alright. So even if you're taking buys, that buys shouldn't, let it off your head, because it's going to really, like, just take a look at this. Came back, retested these supports here. You see what happened? Pushed up. Did it break this high? No. And take a look at this. It still continued the same thing it was doing before. You see what happened? Look at the way the markets break above this support. Was it a nice break of support? No. Sorry, a nice break of resistance? No, it wasn't. It was not. Can't you take a look at this? There was no nice rejection here. That is number one. Okay. We broke through it. The 4 hours came to retest it. That hammer candle, then it bought a little bit, right? Then what happened next? It broke through it again. Just take a look at market manipulations. All these things, if you are not careful, you always get your stop loss hit. So I'm on the 1 hour right now. I want us to take a look at that. I want us to take a look at the 4 hours. Okay, I think right here. So you can take a look at this market structure here. It's not actually a very nice. This is just like more like a consolidation. You see, if you're using this kind of support here, that is why you should always use your 4 hours. 4 hours is going to show you the major support zones. Because let's say you are using this support right here. If you are using this first one here, you are definitely going to be buying at this point. First rejection, second rejection, the third one, it gave a very nice rejection. You enter for a buy at this point. This is long. You enter for a long position here. Sorry, this is a mistake. You enter for a long position at this point. After I give you this nice rejection, you enter for a long position. Either on the 15 minutes, you put your stop loss below this point. Then look what happened. That is why you should always focus on your trend. Focus on the trend. Don't focus on the small pullbacks you are seeing in the market. Take a look at this. If you had your trend line on, look, start from here all the way to the upside. There's a trend line break. And don't forget, we are in a downtrend. it retested a major support here, right? Fine.